Hello traders, welcome back to Global Forex Guide. In today's video, we're diving into the essential trading order types you need to know to navigate the Forex market effectively. Understanding these order types can make a significant difference in your trading strategy and overall success. 1. Market order. A market order is the most straightforward type of order. It is executed immediately at the current market price. This is used when you want to enter or exit the market without delay. Example: you see EUR/USD at 1.2 thousand and decide to buy immediately. Your order will be filled at the best available price, which should be around 1.2 thousand. 2. Limit order. A limit order is used to buy or sell at a specific price or better. For a buy limit order, you set the price below the current market price, and for a sell limit order, you set it above the current market price. Example: EUR/USD is currently at 1.2 thousand, and you believe it will drop to 1.1950 before going up. You set a buy limit order at 1.9950. If the price reaches 1.950, your order will be executed. 3. Stop order. A stop order, also known as a stop loss order, is used to limit losses. A buy stop order is set above the current market price, while a sell stop order is set below the current market price. Example: you have bought EUR/USD at 1.2 thousand and want to limit your loss if the price drops. You set a sell stop order at 1.1950. If the price drops to 1.950, your position will be sold to limit your loss. 4. Stop limit order. A stop limit order combines the features of a stop order and a limit order. Once the stop price is reached, the stop limit order becomes a limit order to buy or sell at a specified price. Example: EUR/USD is at 1.2 thousand, and you place a stop limit order with a stop price of 1.950 and a limit price of 1.1940. If the price drops to 1.1950, the order becomes a limit order to sell at 1.1940 or better. 5. Trailing stop order. A trailing stop order moves with the market price. It helps lock in profits while limiting potential losses. The trailing amount can be set as a percentage or a fixed amount. Example: you bought EUR 2000 and set a trailing stop of 50 pips. If the price rises to 1.2005, the trailing stop moves to 1.2 thousand. If the price then falls to 1.2 thousand, your position will be sold. 6. Good till cancelled, GTC. A GTC order remains active until you decide to cancel it. It doesn't expire at the end of the trading day, unlike a day order. Example: you place a buy limit order for EUR/USD at 1.950. The order stays active until it is either filled or you cancel it. Understanding these trading order types can help you execute your trades more effectively and manage your risk better. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe to Global Forex Guide for more tips and strategies. For more in-depth tutorials and exclusive trading insights, check out the links in the description below. Happy trading!